Hello, my name is Jacques Steenkamp. I'm the CEO of EOACC. We are accountants and business advisors. We're also the guys that created Taxdash, which is a advanced income tax planning tool, personal income tax planning tool. We also use that to collect information for our clients to process and submit their personal tax returns. Right, there's been so many changes in tax over the last couple of years, so I thought it will be really good to go through a couple of examples of and comparing how you will be taxed through a limited company versus self-employed. So if you're sitting with that situation where you need to make a decision between the two, it will just be interesting to see from a tax perspective now, because for self-employed, they've reduced the Class 4 national insurance and they've scrapped Class 2 NI as well. So let's get straight into it. So first example, I'm only going to look at a limited company for now and just talk you through in detail through the calculation. So in this one, the company had £30,000 turnover. What we will usually do in this case is we will pay a small salary. I just want to say, like, with these examples, it's important that we're just looking at one source of income. Your calculation will be different if you have other sources of income. So if you earn a salary in another place and some self-employed income, that's completely different. This is just looking if all your income is coming from this company, then or one place or one source of income. So to get back to this £30,000 turnover, we'll pay a director salary of £9,096. That's other business expenses. So if you take turnover, less director salary, less other business expenses, that will give you the profit before tax. In this example, assuming there are no other associated companies or anything like that, the company will pay 19% corporation tax. So you take the profit before tax, less the corporation tax, which will give you your retained income. And it's this amount that you can pay out as dividends to the shareholder of the company. So that's how I calculated that dividend, plus obviously the director salary that the director earned as well. So the total income for the director / shareholder will be $21,978. When they submit their personal tax return, they will also have a personal tax liability that they've got to pay on those dividends of $779. So if you take that gross income less the personal tax, that will give you the net amount the director shareholder will clear at the end of the year. At the bottom here, I've just summarized all the different taxes that's payable. So it's your corporation tax plus the personal tax, which gives you the total tax payable. Now let's have a look at what this will look like if you go for a self-employed business. So turnover will be 30,000. We won't pay a director salary. When you are self-employed, you will be taxed on the total profits that you make. So you just take income, less expenses, same expenses as with a limited company, gives you the profit, and then your income tax due on that profit will be $2,486, and you will have Class 4 national insurance of $1,097, which means that profit less the taxes paid will leave you in your pocket $21,418. So in this case, it's actually the self-employed that's slightly better by £218. And here at the bottom, I'm just comparing the taxes, and you'll see you'll get to the same total. So very, very little difference between the two. It is obviously very, very important to note or take into consideration accounting fees, because a limited company is a separate legal entity. When you trade as a sole trader or self-employed, it's you are the business. I know a lot of people think, well, with a limited company that they the sole director and shareholder, so they are the business as well. But you need to see that it's two separate legal entities. And with a limited company, then you've got more statutory filing obligations. You've got to do a confirmation statement. You need to have a registered office address. You need to file a set of annual financial statements or accounts, plus a company tax return with that. And usually, or not, the fees for, if you need an accountant for running a limited company, is going to be more than a self-employed, generally speaking, business. So you need to consider that. So if you've got a really easy business where you just raise maybe one invoice a month or a couple of invoices a month and a few expenses, your bookkeeping could be really, really easy with a self-employed business, and you only need to do a personal tax return at the end of the year. if you use an accountant for that, it's probably going to cost you around 200 quid, 200 pounds plus VAT to process that. With a limited company, because of all those other statutory filing obligations, I would say the fee could be around about £1,000 if you just want basic payroll and a very basic set of books. So there is a bit of a difference there. But you're also going to consider what sort of self-employed business you have. Because if you've got a business with a lot of business transactions, and maybe you've got some assets, a van and tools, machinery, then you need to capitalize those assets and write it off over a period and correctly treat that for tax purposes. So in that case, you will need to draw up a set of accounts, even for the sole trader business. And in that case, there's not going to be a big difference then between the two accounting fees. But it is something to consider. Okay, well, I'm just going to run through a few more examples now, and I'm just going to increase the income to see what this difference between the two, what that looks like. So my next example, I've increased the turnover now to £70,000, and I've just slightly increased the expenses because I think that most likely will be that it will incur slightly higher expenses for a business like this. It really just depends on what you are doing. But at the bottom now, you can see through a limited company on this income and expenses level, you'll clear £47,054. This one, £45,968. So in this one, actually interesting, the limited company is slightly better off by £1,086, but really pretty much on par between the two. Next example, £100,000 income, expenses of £10,000. Here you will see it's actually moving in towards the self-employed business. So if you net income cleared through the limited company is 61,554, through self-employed is 63,368. Again, a little bit of a bigger difference now, but in favor of the self-employed. And as we continue to go through, you'll see 125,000. Again, self-employed is better off than a limited company by 1,107. Next one, £150,000. That gap's now getting bigger. Self-employed better than limited company by £3,233. £175,000, and really getting significant now, where self-employed is better by £9,154. So the key thing that you need to consider with these two calculations is assuming that whoever's the owner of these businesses, they need to take out all the money. Remember, when you are self-employed, you will pay tax on all the income that you earn in a tax year. With a limited company, because as I said, it's a separate legal entity. So firstly, the company will earn the income and you will incur the expenses. And then you've got this amount that I've calculated here, which is the company profit after corporation tax, 116,928. The shareholder, in this case, has got an option when he wants to pay that out. He can leave £60,000 in the business and just pay himself maybe £56,000 or whatever he wants in a personal tax year. And maybe next year, maybe he doesn't have any income next year. And then you can pay out some more of those dividends in the following tax year, which means he's moving income which would have been taxed at the higher or additional tax rate to the basic tax rate band. You can easily save a significant amount of money. So the key thing is to determine if the business owner needs all the money. If you need all the money and you're self-employed, then on this sort of level, you're going to be better off being self-employed. Again, just to explain how this will work in self-employed case, if you earn £175,000 this year, this is the total tax you will need to pay. If you then have zero income next year, there's nothing you can do to move income around. It's you need to pay income on all the income that you've earned in each tax year. I hope that makes sense. So just quickly want to run through a few other things that I've made notes here of. Let's just move my precious asset here. So other things that you need to consider, whether to set up a limited company or trade as a sole trader. Husband, wife. So if your husband or your wife is not in the higher tax bracket, you could give them a share in your limited company and then allocate, or they can then earn dividends. And instead of you maybe being in the higher tax bracket, they can earn dividends and maybe they're in a lower tax bracket. So you can make significant savings there. But again, you've got to look at your personal circumstances. If your wife's earning already salary from another source and she's already additional tax rate payer, then it's not going to work. Accounting fees, I've mentioned that earlier. Do a comparison between the two. R&D tax credits, you can only claim that if you set up as a limited company. Limited liability for a limited company. The limited company does give you some sort of protection. So it limits your liability so if things goes horribly wrong, there is a level of protection. Whereas if you're a sole trader, you are personally liable. Again, if you trade as either business, always make sure that you've got proper PI insurance, employer liability, and employee insurance for these businesses to protect you. Profit extraction. I've mentioned that, where it's important, like what is your strategy and how much money do you need and can you leave in the company? That becomes a very important aspect to decide as well between the two options. VAT registration, it's just my personal preference, really. I think when a business needs to register for VAT, then I just think it's better to maybe look at rather at a limited company. Again, if something goes horribly wrong, let's say, I can't think of them, but a lot of things can go wrong in business. But if things go wrong, the limited company is going to protect you. And when there's VAT registration, it's again, with VAT, things just get way, way more complicated. Business asset relief. When you've got retained income in a limited company, you've built up that retained income. So then you can also claim, when you close that business down or sell it, you can claim or claim business asset relief and potentially just pay 10% on that. There are some qualifying conditions that you need to comply with, but that could be a huge saving if you've set up as a limited company. Succession planning and inheritance tax planning, you need to consider that. There's some options with a limited company. More than one shareholder. Again, a limited company could be a very easy way if you've going into business with somebody else and it's going to be different shareholding, because it just legalized that structure. Very easy, because you incorporate the company and you can issue the shares as you guys agreed. But just always remember that it's still important to go and look at the shareholders agreement to make sure, because that shareholders agreement is really going to stipulate who needs to do what and what happens if there's a fallout. So it is important to look at that. Where was I? IR35 and employment status. Again, if you're just going to work for one client, one or two clients, and there could be employment status. So there could be, if HMRC have a look at it, whether you are seen as an employee and not a genuine subcontractor. It's important to note IR35 rules are actually only applicable to limited companies, but for self-employed businesses, the employment status comes into play, which is more or less the same thing between the two. But there is a difference at who is liable if the contract is seen as an employee and not a subcontractor. And it's important to know that with a self-employed business, it's the engager or the end client that's responsible for those taxes. So very important that you take advice and just look at your specific scenario. And again, different rules for limited company around IR35 as well. So just something to look into. If you think, but if you're going to have like a plumbing business and you have loads of different clients, then IR35 is not going to be an issue for you, or employment status. Other income sources, I've mentioned that earlier, very important. These calculations are based on you just earning, that's your sole income. As soon as you have other income, rental income or salary, you need to look at your specific situation. E-commerce. I've also found in the past that clients have set up as a sole trader and then later wanted to convert into a limited company, and they were like registered on a whole lot of platforms, but it then become very problematic for them to, big mission for them to try and change it from a sole trader to a limited company. So again, if you think that might happen, you may just think, I'm going to start as a sole trader and later I'll see if I want to convert to a limited company. Just check with all the licenses and things that you sign up with your website and everything that you sign up, that you will be able to convert it from a sole trader business to a limited company if you later go and do that. And then SEIS and EIS investment schemes, these are great tax schemes that's out there, and those will only be applicable when you've got a limited company. I hope I've not given you more headaches now than answers, but it's just important, and I hope that list will help and just let you know everything that you need to consider between the two options. It's unfortunately not an easy answer, and it may come down to your personal preference, really. It's just trying to list everything that you need to consider. I also can say sometimes people don't have an option where they can go as a sole trader business where the end client just demand, they say you have to be a limited company. Also, if you're dealing with a lot of corporate clients, it sometimes is better to set up as a limited company because it looks like it's a more formal structure. So even though you think I'm not going to make money necessarily in the or massive amount of income or profit in the next 2 years, it's still better to set up a limited company in those cases because of the end clients that you're dealing with. I really hope that was helpful. If you have any questions or you need help, feel free to get in touch with us. Happy to help, of course. Thank you so much for listening. Appreciate it. Thank you.